Welcome to today's Practical Planning Tip by ParkBridge Wealth Management. My name is Jonathan Shenkman. I'm the President and Chief Investment Officer of the firm. A Freilich and Purim. Today is the holiday of Purim, and I'm wearing my onesie, which is part of my costume this year in honor of the occasion. On the theme of Purim, I'd like to discuss 5 hidden investing lessons from the Megillah. And by way of background, Purim is a joyful holiday celebrated with costumes, humor, and festive meals. Yet, underlying the revelry is a story about hidden risk, sudden reversals, courage under pressure, and long term survival. And these themes, central to the Megillah, also map surprisingly well onto the world of investing. The narrative of Esther and Mordecai offers a framework for thinking about uncertainty, preparation, humility, and responsibility. And when viewed through the lens of financial planning, financial decision making, Purim becomes more than a historical drama. It becomes a guide for navigating markets that are unpredictable, emotional, and often shaped by forces we cannot see. Lesson number one of the Megillah is that hidden risks matter. In the Megillah, the danger facing the Jewish people is not immediately obvious. It develops quietly through palace politics, personal grievances, and the manipulation of power. In fact, while the Megillah only takes around 30 to 40 minutes to read, the actual story unfolds over nearly 10 years. By the time the threat becomes clear, the decree has already been sealed. Markets operate in a similar way. The most dangerous risks are rarely the ones that dominate headlines. They're the ones investors ignore during good times because everything appears stable. Concentration risk, excessive leverage, lack of liquidity, and overconfidence in one's investing ability tend to build slowly. They accumulate beneath the surface during a bull market as investors grow complacent. When these risks finally reveal themselves, prices adjust long before most investors have time to react. Perm reminds us that dangers often hide in plain sight and that vigilance is essential even when everything appears calm. Lesson number two, reversals of fortunes happen quickly. Hamid seems unstoppable for much of the story. He has political power, he has royal favor, and a plan that appears airtight. Yet, in a matter of hours, the narrative flips. The villain is exposed, the decree is challenged, and Jewish people are saved. Markets behave with similar speed. Bull markets feel permanent while they last, and downturns feel endless when they arrive. Both impressions are illusions. Sentiment can shift in a single week. Economic data can surprise. Geopolitical events, as we're seeing right now, can reshape expectations. A prime example is this during the COVID-19 pandemic, when market dropped over 30% in a matter of weeks and then bounced back equally quickly. An individual stock may feel rock solid, but then airplanes start falling out of the sky, and Boeing's dividend was cut to zero and the price dropped by 50%. Investors who rely on trying to predict the next twist often find themselves reacting emotionally rather than strategically. Purim teaches that dramatic reversals are part of life. A disciplined asset allocation grounded in long term thinking rather than short term forecasting is often the wiser path. Lesson number three is that preparations matter. Mordecai tells Esther that perhaps she attained royalty for precisely the moment when her courage would be needed. Her preparation, her character, and her willingness to act created the possibility of salvation. In investing, preparation creates optionality. Liquidity, diversification, and patience allow an investor to act decisively when opportunity appears. You cannot control market events. However, you can control how prepared you are when they unfold. Investors who maintain cash reserves, avoid excessive leverage, have proper insurance, and build portfolios that can withstand volatility or adverse events are better positioned to take advantage of market dislocations and challenging life events. Preparation is not glamorous, but it is powerful. Esther's readiness changed history, and investors' readiness can change financial outcomes. Lesson number four is that luck and skill are not the same. The very name Purim comes from the word pur, meaning lots. The story acknowledges the role of chance in human affairs. Haman cast lots to determine the date and destruction, and the entire narrative hinges on a series of seemingly random events. Markets contain randomness as well. A strong year does not prove genius. A weak year does not prove incompetence. Investors often contribute success to skill and failure to bad luck, but the truth is more complicated. A sound investment process matters far more than any single outcome. Evaluating decisions based solely on results can lead to overconfidence during good times and unwarranted despair during bad times. Purim reminds us that chance plays a role in every story. The goal is not to eliminate randomness, but to build a process that can withstand it. And lesson number five is that community and generosity are central to a meaningful financial life. Purim emphasizes mishloach manot and matanot levyonim, acts of giving that strengthen the communal bond and support those in need. Similarly, financial success detached from values can become hollow. Wealth is a tool, it's not an identity. It is meant to support family, communal responsibility, and the ability to contribute to something larger than oneself. Investing is not only about compounding returns, it's also about compounding impact. Purim's emphasis on generosity reminds us that money gains purpose only when it's used to uplift others. And here's a final takeaway for investors. The Megillah is a story shaped by uncertainty, hidden danger, and redemption that arrives through courage, clarity, and preparation. Successful investing echoes these same themes. Build a portfolio and a life that can absorb surprises without losing direction. Focus on the decisions you can control, accept that uncertainty is part of every financial journey, and remember that resilience, generosity, and thoughtful preparation will always serve you better than trying to predict the next dramatic turn in the story. And with that, I hope you found this practical planning tip helpful. Until next time, stay prudent, practical, and don't forget to plan ahead.